Naked price action can help you identify what the market will do next. So in this video, I will share with you guys 4 price action signals that you really need to learn as soon as possible. Let's not waste any time here. Without further ado, let's jump right into it. The first and one of the most important price action signals I want to share with you guys is the failure test. This is one of these signals that happens all the time, and it's super important to learn. It can happen in both, uptrends, it can happen in downtrends, and it can also happen in range-bound markets. But I think the easiest way to show this price action signal is to imagine a range-bound market. So let's say we have a range right here. We have a resistance level. This orange line is the resistance level, and we have some sort of support level right here. What the failure test basically is that when we have a clearly defined resistance or support level, like right here, and we see the price quickly dip below either the support or resistance and then shoot above like this. This price action right here is what we call the failure test. And as I said, we can both have bullish failure tests like right here, but this can also happen for the resistance. So it can look something like this. The price pushes above the resistance and then quickly shoots below. So this right here is another example of a failure test. And as I said, we can also have this in, for example, uptrends or downtrends. So let's say we have an uptrend right here that goes something like this. Then the market starts to consolidate for a while, maybe goes something like this. Then you can see we have a sort of short-term support right here, and then this point right here would be the failure test. Now let's take a look at how this can look in a real life market. So we are currently on the 5-minute time frame on the Euro USD, and here you can see that since after the downtrend right here, the market has been range bound. You can see that this is one of these examples when we have a clearly defined trading range right here. We have a clearly defined resistance and we have a clearly defined support. Let's take a look at the support. You can see we touched the support not only 1 time, 2 times, but 3 times right here. But during the 4th time, something very interesting happened. As you can see, the price during one single candle quickly dipped below the support and then shot above. When you're looking for your failure test, the perfect failure test is when we have, only pretty much one candle and we see the wick go below either the support or resistance, and then we want to see the candle close above the support level. So as you can see, in this case, we have a candle close pretty far above the support. That is a good sign. If the candle, for example, closes at the support level, this is not good. We want the price to push, to really, push above the support. And the most common way to enter this price action signal is to enter at the candle close, and you want to set the stop loss below the lowest part of the failure test. So you can see that this right here is the lowest part of the candle. We want to set the stop loss below this point. And as for the target level, if we have a range, many traders will set the target below the resistance of the range, because this is, likely that we see some selling pressure coming in at this point. Or you can use a fixed risk to reward ratio, such as, a 2-to-1 risk to reward. In this example, you can actually see that we pretty much had yet another failure test right here. The next price action signal I want to talk about is the breakout buildup. And if you are a breakout trader, if you like breakout trades, this is something that is so important to learn. But even if you are more of a trend trader, this is still a concept that can be super useful. And what do I mean by breakout buildups? Well, we have a few different structures here. First of all, let's say that we have, once again, we have a sort of trading range right here. But then we see that the price starts to get a bit more narrow here, either near the resistance or near the support. So let's say that we have, for example, a structure that looks something like this. We have a trading range, but near the resistance, we start to see a more narrow range. So you can see that we have a sort of range right here that is getting tighter near either the support or resistance. This right here is an example of a breakout buildup, but we can also imagine a price action that looks more something like this. Let's once again say that we have a trading range, but after a while, this time we start to see the price going more something like this. So here is the resistance and here is the support. But in this case, we can see that the sort of lows, you can see that we have one low, but then we have a higher low. Then we have yet another higher low. So we sort of have higher lows into support. This is yet another example of a breakout buildup. And what a breakout buildup basically tells us is that we are more likely to soon see a breakout either towards the upside or towards the downside. So both of the examples I showed right here is examples of bullish breakout buildups, and these ones indicates a breakout towards the upside. Of course, when you are trading breakouts, you still want to look out for, more price action signals. For example, when you see a breakout, many times if you see a bullish breakout, you want to look out for a strong bullish momentum candle when you actually see the breakout, and preferably you want to see, let's say that this is the volume indicator, you want to see lots of volume as well. Let's actually go back to the exact same chart we looked at earlier. Remember, we had the trading range right here, but here you can see something very interesting. After the range, we started to see, higher lows coming in. We have one low right here, we had a higher low. We had yet another higher low, and then a higher low once again. So you can see that this is actually an example of a breakout buildup. We are sort of, the buying pressure coming into the resistance is building up. The buyers in this market is accepting higher and higher prices, and they are more eager to buy. And as you guys can see right here, the price finally broke above the resistance. In this case, it wasn't really a good breakout. You can see we didn't really have, one could argue that this candle right here was the real breakout. This was definitely not a good entry in my opinion. The candle was too small right here. But you definitely don't have to enter on the breakout. Many times, what many traders do is that they wait for the retest. So you can see we broke out right here, the price went up, but then we came down here and tested the previous resistance, right? The previous resistance we tested as support right here. And you can see that this retest was a strong green candle, a strong bullish engulfing pattern. So this right here could have been a good entry point. And you can see that after this retest, we actually started a pretty nice trend here towards the upside. The next pattern I want to talk about is called the symmetrical three pushes, not the symmetrical like this. Sorry for the ugly writing here. It's called the symmetrical three pushes. And this pattern can both help you get better entry points in the market, but it can also help you understand when you should actually exit a trade. So this is a pattern that can happen in both uptrends and downtrends, like many of the signals here. But let's take a look at the uptrend example. So let's say that we have a nice uptrend right here, consisting of, as you guys know, both higher highs, so one high, higher high, and also higher lows. The symmetrical three pushes is when we start to see the sort of character of the uptrend change. It may look something like this. In a healthy uptrend, we want the impulse moves and pullbacks here to be about the same length. You can see that this impulse move is about the same length as this one. We can see that the pullbacks are around the same length. But here with the three pushes, we start to see sort of very short pushes here towards the upside, and we start to see very small pullbacks. And you can see that we want to look out for 1 and 2 and 3 highs that are very close to each other. And what this can actually indicate is a trend climax, meaning that this trend is starting to shift to either a downtrend or at least a sort of trading range. I know that this is a price action video, but I can just mention that when we see these kind of pushes, many times if you have a momentum indicator like the RSI or the MACD, you will actually start to see the momentum indicator. Let's say that this is the RSI. You will actually many times when you see the three pushes start to see the momentum indicator going down. This is what we call a divergence, and this is not really price action. But one very nice thing about this is that by only reading the price, so if you really learn this pattern, you can by only reading the price actually know that it's likely that we have a divergence. So very good price action traders can pretty much find divergences just by looking at the price. So now let's take a look at a real life example. I'm currently looking at Bitcoin here on the 15-minute time frame, and here you can see that we have a very nice trend. We have an impulse move, we have a pullback, we have the next impulse move, But after this, we are starting to see the sort of price, the character of the trend is starting to change. You can see that the up moves here are getting shorter and shorter, and you can see that we have 1, 2, and 3 highs here that are much closer to each other compared to the previous trend. And let's actually show you guys what I talked about earlier with the momentum indicator. So let's just open up an RSI or any momentum indicator really. So I'm gonna open up an RSI right here. And what you will notice is that probably, yes, as you can see in this case, you can see that we have the RSI is starting to move in the opposite direction of the price, right? So you can see when we have the 3 symmetrical pushes, you can see that the RSI indicator goes in the opposite direction. This is what we call a bearish divergence and indicates a potential reversal to the downside. So how can you use this signal, you know, in your trading? Well, you can either use it as a warning sign that, you know, now it's the time to exit. Let's say that you had a long position during this trade and you started to see the 3 pushes coming in. This can be a warning sign that, you know, now it's time to sell. But you can also, of course, use this as a sell signal on its own. However, what I do recommend is that you combine the 3 pushes with other price action signals. For example, right here, we can see that we had a bearish engulfing pattern. You can see these 2 candles is a bearish engulfing pattern. So that could have been a potential short entry and so on and so on. But what's also important to notice about the 3 pushes is that many times this will not lead to a strict reversal. It's not, you know, 100% that the trend will reverse only because you spot the 3 pushes. Last but definitely not least, we have the change of character, or for short, CHoCH. And many traders actually use indicators to find the change of characters, and that can be a good option, but in my opinion, being able to find the change of character on your own only by looking at the price is invaluable. And also some indicators will provide false signals, so this is definitely something I recommend that all of you guys learn. So what is a change of character? Well, we can pretty much hear it on the name. It is when the trend changes character, but let me show you guys. So let's say that we have an uptrend, we have an impulse move, pullback, impulse move, pullback, and let's say that we have another impulse move. I have seen some traders identifying change of characters when the price breaks this dotted line right here. So let's say that after this uptrend, we see a strong move to the downside right here. So I have seen some traders saying that this is a change of character. But in my opinion, this is not a true change of character, because as you can see, here we have one high and then a higher high. And yes, after breaking this point right here, we will have a lower low. So here we have higher highs and lower lows. So after breaking this point right here, the trend has not changed from an uptrend to a downtrend. However, the trend have been changing from an uptrend to a sort of neutral position. So after you see this, it's very possible that the trend will enter a sort of trading range. But a true change of character is something that looks more like this. So let's say that we have yet another impulsive move, we have a pullback, but now the next move fails to take out the previous high. So we fail to take out this point right here, and now the trend breaks this low right here. So the price breaks below that point. What you can now see is that now we have one high and then a lower high, but we also have one low and then a lower low. So in this case, we have actually changed from an uptrend to a downtrend. And this right here is what I call a true change of character. The other thing I showed earlier you can see as a, you know, weak change of character. So let's actually take a look at the chart we looked at earlier. I want to delete the RSI because this is a price action video. Oops. So let's take a look at, this can be a bit hard to analyze, but let's take a look at the price right here. So remember, we had the uptrend right here, we had the symmetrical 3 pushes, but then at this point you can see that we printed a lower high. So we had one high right here, but then we had a lower high. So if we can manage to take out this point right here, then we actually have a change of character. So after the price broke below this blue line right here. I'm sorry if this is getting a bit messy, but I hope you can see here. After we broke this point, we have actually changed the character of the trend from an uptrend to a downtrend. And as you can see, this didn't lead to a beautiful downtrend right away. And this is just the reality of markets. Many times markets will not be as beautiful as in textbooks. They will not be as perfect as in textbooks, but you can still see that this was a valuable signal, because after we changed from an uptrend to a downtrend, you can actually see that this eventually led to, you know, a massive move towards the downside. So this was indeed the start of a stronger move here towards the downside. But alright guys, so to make all of these patterns work better for you, I highly recommend to learn about support and resistance. So if you have some time over right now, I highly recommend that you watch this video next.